Invest Africa, proudly brought to you by KPMG.
Hello, I'm Nozi Pumbandwa, and this is Invest Africa. Thank you for joining us. Now, investing in the continent has been a hot topic this past week, with leaders from Africa gathering in the US to discuss this very prospect. Now, infrastructure development is one of the key areas where investment is needed. But in order for that development to take place, certain commodities like something as basic as cement is needed. Considering the growth in Africa, it is little wonder that the cement industry has produced the richest man on the continent. So what growth prospects are available in this industry? Earlier this week, I spoke to Richard from PPC. With this South African-based company looking to expand into Africa, I began by asking him what the company looks for before entering a market.
So when we target specific markets, there are a couple of things we look for. I mean, the first is the overall GDP growth in that particular country. So if you look at emerging markets, of the top 10 emerging market growth countries, 7 of them are in Africa. And so that's the first place to start looking. Then we look at per capita cement consumption. Now, South Africa's per capita cement consumption is around 220 kilograms per person. And in most of the countries that we are looking at, the per capita cement consumption is below 50 kilograms per person. In some cases, as low as 20 kilograms per person. So
you have a very large underserved market that is ripe for penetration.
Correct. And then there is also the installed capacity in that particular country, and in most cases, take for example the DRC, there is a local producer there that produces around 600,000 tons of cement per annum. Demand is at 3 million. So most of what is coming into the country is imported, so there's a clear need for more capacity within the country. So those are some of the things we would look for. So we'd look for installed capacity, GDP growth, per capita consumption, and of course infrastructure spend, the ability to move products around, local partnerships.
What about the bigger issues, Richard, like the government policy, the political stability, the regulatory environment, sort of the broad macroeconomic indicators? Are those as important as some of the indicators that you're currently tracking?
Yes, they are. And if you look at a number of these countries, especially with a number of these countries exporting minerals, I mean, we all know that China is a sort of a resource-thirsty country. So what is happening is a lot of these governments are in partnership with the Chinese government or Chinese firms to put infrastructure in place that allows them to move minerals to the ports. So what you're finding is that there's pent-up demand already there. So what we are finding is it's pushing up cement demand in these countries. So generally there'll be good political relations between China and the local governments.
But doesn't that squeeze you out? I mean, I would assume that with a big or strong Chinese relationship, that the Chinese would be pushing for Chinese cement players to fill that demand gap. Is it not having that effect of squeezing you out of the competitive play?
Well, although the Chinese are very active on the continent, we, for example, are partnering with a large Chinese firm as our EPC partner in building all these cement plants, Sonoma. And what we are seeing is that the Chinese aren't really building a lot of cement plants on the continent. They've got a lot of cement in China themselves that they're looking to export. One other very important thing to mention is when we look at areas to invest in, we're also very mindful about the proximity to the coast and the fact that you could find yourself building a large cement operation and then have imports landing on your doorstep at very low cost. So we are also very mindful of where we build these plants. So what we are seeing is that the Chinese aren't really building a lot of plants, but they are active in terms of construction, large civil engineering, putting in the infrastructure. So there are good partnerships between ourselves and our EPC partner.
And we're also seeing African players, though, coming to the fore. You're seeing the likes of Dangote Cement going downwards, down sub-Saharan Africa. How has that changed the dynamic in terms of the competition in the industry?
Yeah. So, I mean, Africa has always been underserviced in terms of cement investment. If you look at our own country, up until about 2002, we had installed capacity of less than 10 million tons in South Africa. Then we all know what happened between 2002 and 2008. Capacity doubled. We had the large infrastructure, the World Cup, the Gautrain, the Sanrail projects, and that in itself attracted a lot of players, because all of a sudden South Africa became very attractive. People looked at this market and said, we want to be there. And of course, if your name is Dangote and you have aspirations of being the biggest cement player on the continent, you can imagine the analysts and the investors saying to them, if you have these aspirations, how come you're not in South Africa,
right,
the continent's biggest economy? We're no longer the biggest economy. Nigeria has overtaken us. But if you're serious about being the biggest player, I'm sure you will be challenged to be in South Africa.
But those glory days are over. And if we were to use the cement industry as an indicator of growth of any economy, South Africa, we've seen sluggish growth in the economy. And we're also hearing cries from a lot of players saying, well, we're not really seeing this infrastructure spend that everybody is talking about. Is this something that is symptomatic only of what's happening in South Africa? Or is the rest of the continent open for business, and we're seeing infrastructure spend from a government perspective anyway coming through?
Well, let me deal with it in two parts. Let's talk about the demand that has now fallen in South Africa. So we have now an oversupply situation in South Africa. So margins and prices are under pressure. We have growing imports coming into the country. We've got about 1.1 million tons coming from Pakistan into South Africa, which makes up about 8 million tons, 8% of total cement demand in South Africa is serviced by imports. And you've got new players like Dangote that have entered the market. They've built new plants at very high cost. So South Africa is unique in the sense that if you look at South Africa's growth trajectory, South Africa is in fact the poor performer on the continent. We are forecasting to grow less than 2% this year, and you've heard our president saying that we are targeting to grow by 5% in the next 3 to 4 years. So that's not good enough for our industry, unfortunately. Whereas in other parts of the continent, there you're seeing growth of between 7 and 10%. Places like Ethiopia have been growing for the last number of years at close to 10%. The DRC is the same. Rwanda is showing fantastic growth. In fact, the attraction into Rwanda for us is the fact that that country only has 100,000 tons of installed capacity. Most of the cement coming into Rwanda is coming from neighboring countries like Burundi and Uganda and those places. So we have the opportunity there to build a 600,000 ton plant in a growing economy. And the story carries on for many other parts on the continent. There are areas, of course, where it's not that easy, where there's still a lot of strife and political conflict, the South Sudan, Somalia, and those sort of places. But what we have seen, and from our own experience in South Africa, is when demand comes back, it comes back really quickly. And given that it takes 3 to 4 years to build a plant, you generally find that there is a deficit between when this demand comes back and when you're ready to supply the market, and that gives rise to imports. And that's how imports started in South Africa. We all sat back and we were very negative about the South African economy, and voila, when we opened our eyes, there was the World Cup, Gautrain, and all of these things, and none of us were ready to meet demand. Now we sit with 1.1 million tons from Pakistan and we're complaining about it, but had we been a little bit more bullish and put the capacity in, we may have been in a position to keep out the imports.
Let's talk about threats to the cement industry in particular. I've seen a trend that although we're seeing a big retail boom on the continent, which is obviously followed by construction and therefore the cement industry, there's also been quite a strong offtake of online retail. Is this eating into the bricks and mortar model that we know, or are we finding that they're complementary and therefore it's not that much of a threat?
Yeah, I mean, retail, if one looks at retail, one needs to divide it. There's the sort of normal FMCG type retail, the consumer, the stuff that's fast moving. And then there's still the old hardware retail business which hasn't caught up with the FMCG type model, where it is still very much brick and mortar. People are buying heavy goods like cement and paint and and all sorts of things which are not so difficult to buy online. So what we are seeing is, if you look at the customers we deal with, the likes of Massmart, Cashbuild, Build It, and all of these retailers that have hardware stores attached to them, they're not that strong in terms of online purchases, but we think it will come. And if it does come, I don't think it's going to make our job any more difficult, because I mean, you have to move the cement to the retail stores, you have to move it to the construction sites, it gets consumed at a particular point. So all it will do is it might disrupt the distribution model a little bit, but I think if it comes, we'll be geared and ready to take up the challenge. So it's not going to complicate our lives too much.
Final question. I mean, we always see in the construction industry, or we've seen in South Africa, a lot of collusion, a lot of negativity around that. And of course, there must be some linkage to the cement industry. What are the key lessons that we've learned from this, and to make sure that it's not replicated in other markets?
Yeah, I think, you know, when people look at what has happened in the construction industry and in the cement industry, and let me first say this, I think there are a number of people who are very quick to criticize government for some of the things that go wrong in government. But as business, we must also sort of look in our own backyard and say, we haven't been all squeaky clean ourselves. So there is a trust deficit between government and business, and we are hoping to fix that. But it's also symptomatic of the type of country we live in. You know, for many years, South Africa was a closed economy during the sanctions period. So we did things very differently because we weren't exactly trading with the rest of the world. We were kept out, we had sanctions against us. And so things like cartels, collusion, and those things weren't exactly frowned upon. So now we have a democracy, we're part of the WTO, we're an open economy. You can't continue doing those sorts of things anymore, which doesn't mean they were right in the past. But if you wanted a booming cement industry and you wanted a booming construction industry, we had to do certain things that allowed us to put the kind of infrastructure into South Africa that we have today.
Absolutely.
The Cecils and the Moss Gas and those sorts of things. Going forward, I think we are in a position, our Chief Executive, Ketso Gordon, has asked for a construction CODESA. And I think, you know, if we can get the role players around the table and realize that if South Africa is going to deliver on the National Development Plan, if we're going to improve social conditions for our people in the country, we need to find each other and we need to start delivering this infrastructure that is going to take South Africa
Unfortunately, Richard,
forward.
we've run out of time, and it seems as if I've just hit a nerve with something that's very close to your heart. But thank you for the time, and thank you for joining us.
My pleasure.
It's time for a short break now, but when we come back, I'll be joined by Dexter Mahachi. He's an analyst with Imara Securities. And from Lagos, we'll be joined by Dev Kumar Edwin from the Dangote Group. Don't go away. Welcome back. You're still watching Invest Africa. Remember that we value your suggestions and your feedback, so send us an email. That's to investafrica@abn360.com, or talk to us on Twitter, following us at CNBC Africa, or following me at Nozipho Mbanjwa. And don't forget that our hashtag is Invest Africa. Still with me to continue this discussion is Dexter Mahachi. He's an analyst with Imara Securities, as well as Dev Kumar Edwin from the Dangote Group Cement. Dev, let's start off with a voice from Lagos. I mean, earlier speaking to PPC, although they have begun venturing into the African continent, it is still at a cautious pace. How does this compare with the Dangote's Group Africa strategy?
Well, you see, the Dangote's Group strategy has been totally different because PPC has been in the business for long. We have been totally new to the business. Our first venture into the cement business was in the year 2000, when we started with a small cement terminal. And our first cement plant, integrated cement plant, started producing cement in 2005. So we are comparatively very new to the business. But our growth rate has been extremely phenomenal, because this month we have commissioned another 9 million tons within Nigeria. So today we have 29 million tons capacity within Nigeria and 1 million ton in Ghana. And by the end of December, we'll be having 42 million tons capacity within sub-Saharan Africa. So we started late, but our growth rate has been very fast. PPC has been there in the market for a long time, and now they have started to expand. So they know the market, and they can easily expand compared to others.
Dev Kumar, let's just quickly talk about the markets that are top of the list for you as you expand into the continent. Out of Nigeria, where are you likely to see your business taking off more phenomenally than in any other market?
The largest growth will be in the West Africa, but we have not hedging our bets in only one region. And as you see, this year our cement plant is getting commissioned in Ethiopia. Our cement plant is getting commissioned in Zambia, South Africa, apart from the West African regions, including Senegal, Cameroon, and Sierra Leone. So our growth rate is quite well spread. In the coming year, we'll be commissioning the plant in Tanzania, and the subsequent year it will be Congo and Kenya. So we are spreading all over. We are looking at markets where there is a good demand-supply gap. And any country where there is a gap, we are trying to enter into the business.
Dexter, how does this compare with the demand trends that we are likely to see for the industry?
I think for you to answer that, you need to look at what is actually driving it. Infrastructure spend all across sub-Saharan Africa is projected to rise to about 180 billion or so, according to one of the latest reports from PwC. In my view, the principal drivers remain population growth, rural to urban migration, and also simple GDP increases, which on average sub-Saharan African economies across the board are growing at roughly about 5% or so. And because of this, there's always a deep-seated need for more roads, more water and sanitation infrastructure, and so forth. And with cement being one of the critical ingredients in all of those, in all of that infrastructure, we're likely to see cement demand rising all the way through for the next 10, 15, 20 years or so.
Dev, coming back to some of the indicators that you're likely to be tracking as you move into new markets, what is it that you look for as a prerequisite before you set up a plant?
As I said, the primary issue we look at it is the demand-supply gap from the technical perspective, adequate availability of limestone. But we don't look at infrastructure as a constraint, because most of the times we invest about 30 to 40% over and above the normal project cost in infrastructure. We build our own roads. Where we need water, we build dams. Where we need gas, for example, we run 100 kilometers of gas pipelines. We bring in communication facilities, we build housing estates. So we build all our cement plants, except in Ethiopia, are all depending upon self-generated power plants. So we invest in captive power plants, including standby power generation capacity. So we invest massively on infrastructure. So this is one issue which differentiates us from other companies. So we invest massively and we try to be dependent upon ourselves rather than the publicly provided infrastructure.
Maybe let's bring it back to Dexter, and I want us to look at the macroeconomic indicators and to what extent these are as important as the supply-demand indicators that many of these players would likely be tracking.
I think you can't look at them separately. They're more or less one and the same thing. Economic growth drives the need for more roads, the need for more water and sanitation, the need for more cement production. And I think for the most part, visionaries like the Dangote Group have more or less jumped the curve and done what no one else was willing to do. There's a lot of companies out there who already had a foothold in African economies in terms of having cement plants and so forth, but not a lot of them have decided to go all out and just expand at such a rapid pace, which is why I think the success is pretty much well deserved so far.
And of course we've confined our conversation to looking at two African players in the sense of them being indigenous players, but surely there are other players. What are the Chinese doing, and how are they coming in and competing in the cement space?
I think the Chinese have been around for a while. They've been, well, dipping into East Africa, and of course, recently they looked at putting up plants in South Africa as well. I think for the most part, the Chinese have preferred to export out of China and bring some of their cement here. But we also had a situation whereby they've been one of the greatest investors in Africa's infrastructure. They've been building some of the roads, they've been building some of the railways.
And this raises the question for me whether they are squeezing out some of the African players, because if they're getting the big infrastructure contracts and that contract allows them to bring their own players, isn't this an advantage that to some extent would sideline many of the African players?
Not necessarily. I think one of the important things that people need to bear in mind is that the Chinese were willing to negotiate negotiate decent terms with a lot of the African governments. And of course, there's that need to provide indigenous employment and so forth. And for the most part, most governments have been willing to negotiate with China and find a solution and a balance between the two. But I think their direct approach has been most welcome indeed, and it is part of the reason why infrastructure spending has been rising at such a terrific rate, because they've been providing the financing.
Dev, Dexter is trying to convince me here at the desk that the participation of the Chinese in the cement industry is good for everybody because they are pushing a lot of this infrastructure spend. Would you share the same sentiment?
Yeah, sure. In the participation, competition is essentially good for the market. So people would not be complacent, and people would look for investment in and production of high quality products. And it would also help the consumer in driving down the prices. So competition essentially is good. And the Chinese have been successful in some of the other investments in the power sector. And they are just trying to enter into the cement sector. The only key issue is they have to be focusing on sustainability and environmental friendliness. As you know, that has been one of the main concerns of the government in China. They had earlier phased out all their vertical shaft kilns, and in the current year, they have been trying to curb the production because one is they have excess capacity, but they are again focusing on those cement plants which have been heavy pollutants in the atmosphere. So that is a critical area they should focus upon, but the competition is good and investment is required in Africa.
I see a bit of a smirk there when he says competition is good, but maybe let's look at another trend that is sweeping across the continent, and this is particularly the green revolution, and this is changing the ways we're designing our buildings and the structures that we're putting out. How's this filtering down to the cement industry? At the end of the day, you still need the cement to put up the structure. Is there an impact at all?
I think there has been. I think one of the positive developments that we've seen from the Dangote Group, for instance, and even across in Lafarge, WAPCO and so forth, is the move towards cleaner fuels, cleaner fossil fuels. This has been tremendously helpful to both the companies themselves, because some of the cleaner fossil fuels, like gas, for instance, are a lot cheaper than LPFO, which they normally use. But in addition to that, they have less, they emit less. So in a way, it's a bit of a win-win in terms of the margins and the pollution. So that has been a most welcome development. Also, as you know, power is one of the critical ingredients for cement plants. And but it remains in critical supply in terms of East Africa and to some extent Southern Africa as well. We are likely to see more cement plants needing the developments of coal and gas fields to actually come to fruition.
Back to you, Dev, just to take on that same question, just the impact of the green movement or the green revolution across the continent, and how that is pushing for innovation within the industry. Well,
primarily it calls for heavy additional investments. That is one of the areas where the company should focus upon. When we first built up our first cement plant, the dust emission standards in Nigeria has been around 250 milligram per normal meter cube of air. The European standards was 50. Nigerian was 250, European was 50. We designed our plant for 15. So subsequently, the European standards went down to 30, and we are still far below the European standards. So we invested heavily on dust controls, dust emission controls. on SOx level controls, NOx level controls. We have innovatively invested on CO2 emissions. And we have even invested heavily on decibel controls on our power plants to bring down the noise levels. So it primarily calls for investment, and the investor should be willing to put forth the money, because immediately it calls for additional capital, but on the long term, you are environmental friendly, the community is going to be happy with you, your long-term business would definitely prosper.
Let's talk about one of the issues that are not so great in the industry, and we first see this in the construction space, and that is collusion. And to a large extent, this filters down to the cement industry as well. What are the biggest lessons we've learned, especially from the South African experience, and do you get a sense that these are being heeded?
I think, for the most part, the moves by the regulatory authorities to step into the breach was most welcome. I think a lot of the companies were reluctant to come to the fore and fix the problems which they had created. But I think for the most part, the lessons have been learned, and some of the companies like PPC and so forth have changed their management as a result of that particular scandal. So I think the lessons are well learned. It's only a question of the consumers and the regulators remaining vigilant to prevent future recurrences of such problems.
But do you feel that the response by the regulators, in particular the Competition Commission in South Africa, has been strong enough to deter future collusion?
I think it's been decent. You don't want to be in a position to kill the goose that lays the golden egg, more or less. But you also want to more or less give them a decent slap on the wrist for their issues.
Dev, let's take a final comment from you, and let's keep it within this conversation around collusion and the role of the cement industry in this. To what extent do you think that we are turning the corner in terms of seeing the cement industry participating and fueling collusion in construction?
Well, you see, primarily we have not faced major issues in this part of the country, especially Western Africa. And as competition comes in, this kind of a collusion will definitely be going out, because competition would drive out these kind of problems, apart from the vigilance on the part of the regulatory authorities as well as the consumers, as Mr. Dex pointed out.
Gentlemen, thank you so much for making the time to join us. That does bring us to the end of the show tonight. Don't forget to send us your details, to send us your comments. The details are on screen. For now, though, Bruce Whitfield is standing by, and he's here to bring you Tonight with Bruce. From myself and the Invest Africa team, it's goodbye for now.